Welcome back to another episode of the Easy Button Real Estate Podcast with myself, Corver Johnson, and Mr. Tucker Merrihew. Today, we are going to talk about, I think, what around the country, a lot of people that I hear from are in pain, and we have a lot of real-time examples of people that are doing very well, and then we're going to kind of deconstruct some of their businesses, how they're operating, and kind of give you a wide sample size around the options that are out there. Because there are people doing deals, there are people making money despite a lot of the pain that's happening right now. So we're going to get into all of that. Before we do, Mr. Tucker, we haven't recorded in a few weeks. So what's going on in the bright, sunny state of Florida for the last couple weeks?
It's bright and sunny today. We've got it's a cool 91, I think is what we're supposed to be. So when you guys come next week, I think you'll be all right. You've been here enough. Tyler, I don't know. It's probably first time here. He might be sweating a little bit. It is sweaty season. But we're moving along on our most expensive spec project ever. I'm not moving it super quickly at this point because I'm kind of letting the market work itself out a little bit. I don't want to undersell this one, and I think it's fantastic lot, fantastic location. So I'm not in an extreme hurry. We're still moving it along though. And then had an interesting thing happen yesterday, I've been watching this lot that's in my neighborhood for like the last 8 months, right? And this kind of ties into what we're going to talk about market-wise and like what you can expect to see in the market these days. And they began listing the lot at $699,000. So pretty expensive for what it was. I mean, everybody that's lived there for a while was like, they're out of their damn mind. And I was like, well, it's somebody might pay in the low fives, maybe, $450 for sure. Well, they reduced it a couple of times, didn't sell. And then they pulled it off the market. And then I just happen to we have a very loose HOA. It's not like it's, formal by any means, but there's like an old gal, there's me and a guy named Ken. And we just kind of like, I'm the vice president, he's the president, she's the secretary or, treasurer, whatever you want to call it. And she called me up on Sunday and she was like, hey, that lot went pending. And I was like, really? They took it off the market? Well, she ended up putting the contract in my mailbox so that I could look at it because they had to give her the contract since we're part of the HOA, I guess. There's no requirement, but they did. Well, and I got the contract, and you'll love this. And this only can happen in a market like we're in right now. So bear in mind, they began listing this lot at $700,000. They took a contract for $350,000. But here's the best part. There's $1,000 in earnest money. It's a 15-day close on the contract, and there's a contingency period for 15 days. so I was like, you know what? That is classic down market garbage contract. So I called back the other HOA people. It's like, there's like a very, very small chance that this actually closes. And then I looked up the people in the contract too, and I would say, yeah, probably a small chance. So anyway, I thought that was a funny story to share with everybody.
That's the most buyer-friendly contract on planet Earth.
Yeah.
They probably don't even put down their earnest money either.
Probably not. They probably haven't even deposited all $1,000 of it. So, but
50% now, 50% in a week. Well, that luxury spec you're doing, that higher end one, what is like the because I know that's the highest price point one you've done, at least to my understanding. What's different on a build out? Like you said, you're kind of slow playing it. Like what's different on a build out like that from the normal product you've built for most of your career?
Not a whole lot other than the design, because we're like less than a mile to the beach in a higher end neighborhood. So, that's a little different than like a Lake Oswego build back in Portland area, where you're suburban with lots of, fir trees and, grass doesn't grow most of the year, stuff like that. Right. So it's just a little bit different design, but the big thing here, it takes a little bit longer on the pre-work to get houses through permitting because they want all this information on like every product you use is hurricane grade. It's in this database of, they give it a number and it says that it can withstand up to a Cat 5 hurricane, stuff like that. So it's just a pain in the ass. And then, like we just had all of our trusses designed and you have to like go through and check everybody's work here. They're not quite as good on the services provider end as they were in the Northwest. So, the last thing we want is trusses getting dropped off that don't actually work for the house. So for the last 2 days, I've been going through 102 pages worth of truss design to make sure that doesn't happen. So it's just, it's boring stuff, but it's things that you got to do, because if you don't, you could have much bigger problems on
Yeah.
the other end.
Way more expensive mistakes is my guess on a build like that, right? You have
Yeah, and
everything.
then everybody's, scurrying around like their hair's on fire because you've got your framing crew out there. You don't have trusses that work and stuff like that. So we're just trying to prevent issues, down the line as we move forward. But there's really not a whole lot different. The house itself is going to be about 4,200 square feet. It's 5.5 baths, 4 bedrooms plus a kind of a room that could be a fifth bedroom. It's got to have a really cool pool, really nice backyard. It'll look kind of like a Keys style house, Palm Beach and Keys kind of mixed together. So I think it'll be our coolest house we ever built. But now that I live in the tropics, it
Yeah.
fits. So
Yeah, that's awesome. Well, I did an Instagram Q&A. We're talking about a pre-show, and like 3 or 4 of the questions were all about like, I'm in pain. What are people doing that's working right now across the country? And so I want to spend some time there. On my end recently, obviously, as you guys know, if you're listeners to the show, my full-time gig is running Easy Button. And then obviously I have a little bit, we do deals when they come to us, mostly through our brand. But one of the things that I've started thinking a lot about, and I've come up in conversation and questions and Q&A that we do in the live calls that I do in our community, which is free. By the way, if you guys listen to this and you aren't in that free community, it's a pretty bad, I think, limiting mistake for how much is in there. At literally no cost to you to show up to calls and ask questions, just be engaged. I think one of the things you can do is just be engaged with people who are doing deals, because there's just like psychological fear and frame. I feel like I got in the business in 2017, into 2016. And up until 2020, I never heard anyone go online and say, oh my goodness, we're about to have the next '08. Right. And then there was this weird period at the beginning of 2020, not beginning, but March, April, early May, after COVID really hit and shut things down, where everything froze. People didn't want you at their home. And that's the first time I'd heard all these, armchair economists that do some real estate deals, build some clout for themselves, go online and say, oh my goodness, the next '08's around the corner. And now about every 6 months, I see them come out and do the same song and dance. And it creates this fear. This fear that goes through the general real estate community. And so one of the best things I think you can do right now, and we're going to get into actually, clients and their companies and examples, but one of the best things that you can do right now is just be around people who are still doing deals and listen to them. Because the people that aren't scared right now, there's a lot of, like Tucker said, there's a lot of people who had had a property listed for $700K that probably would now take a $400K offer. There's a lot of people in your pipeline that probably wouldn't have taken your number 3 months ago that now will. There's a lot of deals in the MLS that are out there sitting that you can make offers on. So that's the first point I want to touch on. I don't know if you have thoughts about that. But I think for people that are out there kind of stuck in inaction, it's a great opportunity to just be around people, whether it's with us or someone else. And also, I think the people that are struggling are the people that are 1 foot in, 1 foot out. Like if you're not fully serious and committed to a real estate business right now, that's the people that I see that are struggling more so than the guys that do it full time, that are taking it seriously, that are spending money on marketing, that are trying to, run sales at some level and chase down deals or doing deals.
Here's how you got to think about it, right? Like if the market is soft, and it's not '08 like at all. There was so many foreclosures and short sales and things that were going on back then that I don't even know if that could ever be recreated. And having been in the finance world that created that, I just don't think it can happen, right? Or at least not in the foreseeable future. But really, what it comes down to is just what you're buying for and what you're selling for, right? In a softer market, it's just your prices get compressed, right? People want bigger discounts. If you're wholesaling, you got to buy at a bigger discount so that then the guy that buys it from you that's going to rehab it has, I used to call it, my oh shit number, right? Like, you in a good market, you have your like month on the market number, you got your week on the market number, and you got your oh shit number. In a market like this, it's like you just buy based on your oh shit number, right? And so if you can get a deep enough discount, whether you're wholesaling it or whether you're buying it directly from somebody, product still sells. It's just things compress a little bit. And then you have to kind of keep your head up and look and say, okay, what's going on in the market? What's the inventory levels? Are they continuing to rise? What's the absorption rate in the areas that we're looking in? Is it picking up? Is it stagnating? Is it actually decreasing? And then you can kind of project, okay, our price is going to compress more. Have they gone, about as low as you think that they'll go? They may not necessarily go up, but they'll flatline. And you can kind of make these guesstimations, and they're educated guesses, right? And that's how you maneuver this market. But it really just it comes down to just buying at a deep enough discount, because somebody will always buy it from you, and those are the guys that are making money.
Yeah, I wrote down two things here while you were talking. One of them is product market fit. And one of the things I've had to learn by running a services company full time is how important product market fit is, and how hard it is to really find, like really having alignment with your clients and what it is that you sell and do. And the cool thing about real estate, if you guys actively in real estate, making your money in real estate, building a real estate business of any kind, is you have built-in product market fit for the rest of your life, because people are always going to be selling and transacting and buying real estate. No matter what the market is, up, down, around, sideways, upside down, people are going to be selling and buying real estate. And so you don't have this issue that most industries have, like the amount of industries right now that are being completely shaken up by AI, where they had product market fit, now they don't, or now they're out of business. You don't really have that in real estate. As long as you're talking to homeowners and you're understanding underwriting, like Tucker said, maybe now you're making offers a little less and having a little more, kind of a cushion for yourself. That's really the only downside of a down market, other than, capital gets harder to access and other things happen too. But that's one of the notes I wrote down. And I think also the second thing I wrote down was that I think there's everyone that I know that made a lot of money in real estate long term has built significant wealth. They go through these seasons of maintenance and these seasons of like a gold rush, where they have this 2-year period where they're positioned well, they're capitalized, they have a team, they have structure, they have understanding, and then you get this major swing up. An example of that, like when I look back at my career during COVID, when people started printing money 5 years ago, I was 21, 22, and I had this house that I got for $415 when the market kind of froze and they started printing money. We still had it under contract. And I sold it to a buddy of mine for $600. I took $175,000 fee, but if I would have kept it, it just sold last year for $2.2 million. And so if I would have kept it, rehabbed it a little bit, sat on it for a couple of years, it could have been kind of a gold rush. So if you guys out there listening, you might be in maintenance mode right now, where you're not making as much per deal. You're kind of just feeding the machine. If you have a bigger operation, maybe you're still making money, but you don't have these massive swings of equity, these massive swings of value add that you create on a deal. But that's okay to have maintenance years, because I think most people, I don't know if you're believing that. I think most people that I meet, they go, oh yeah, there's this one period where I was perfectly positioned and I bought, Jimmy's an example of this. He bought like 300 duplexes in one upswing, because of this one seller that he met, and the market just timed it perfectly, which created a big portion of the equity they have in their portfolio within a year.
Yeah, I mean, I would say this is a maintenance year for me. I mean, we're obviously going forward with the most expensive spec we ever built, but I'm not, piling on a ton of other projects too, unless they're like great lot, like A+ lot, A+ location. Like it's just one of those types of things. But then we have another lot that I could build, but I decided to just rent the house for another year before we tear it down. And, it's down the street from the one that you guys are going to stay in next week. And the reason being is because, that neighborhood is compressed price-wise. I'm going to wait for it to swing up again. I mean, you got to think of it like swing trading stocks, right? For people that mess around with that at all, it's like if real estate had a ticker on it every day and you could see what it was worth, like people could with stocks, it would totally mess with them a lot more. But you have to kind of look at it that way, right? Like some parts of, or some years, the value and the buyers are going to be, there's going to be a lot less buyers and the value is going to be lower. And then other years it's going to swing back up. We're just in kind of a lower lull value wise. And we may be for the remainder of this year. But like we've talked about before, if rates get sub 6%, 5.75%, you're going to see a mad rush of people coming back into this market. Yep. And that's going to be the upswing. And so when that happens, I'm going to tear that damn house down. We're going to build a nice new one right there too and sell it. Right. But I don't want to tear it down and make, $400K if we can tear it down and make $1.2 million, right, in the upswing. So it's like, why do it, right? So we rent it out and just like we rent a lot of other stuff. So yeah, maintenance years are nothing wrong with them. You just have to kind of position yourself to be able to sustain during maintenance years. And if you're transactional, like that's how you're generating your income, then you just got to make sure that you're buying cheap enough so that you can turn that transaction into cash, right? Because you're not going to be holding everything that you buy.
and stacking capital, right? Like I think the people that have been through a decent amount of market cycles, like they always just understand they have to have a certain level of access to cash, because if you have to go into maintenance mode, like I'm sure there's a lot of builders right now who are sitting on 1, 2, 5, 10 lots that they were planning on building out this year and are kind of like, hey, let's wait it out. Let's wait a year. Let's wait 2 years. There's a guy, up by where I live right now. There's this guy, this builder, like right before the 2022 rate hike, bought this piece of land in a really good part of Poway to build like 6 really nice spec homes, kind of a mini community. And he built them. He bought it in 2022. He was done with most of the builds in 2020, well over a year ago. And a few of them are still just sitting there, just sitting there, or just still he's still waiting to finish some of them. And so I think that to Tucker's point, there's nothing wrong with maintenance as long as you have access to capital. And if you are in a transactional business, you are wholesaling. Yeah, it's harder to, especially if you're earlier in your career, it's definitely harder to sit on the sidelines. And that's where I think, we'll talk about some of our active clients, because we have a lot of them that are crushing it, and how they're making money. Did you see the yesterday talking about interest rates when Trump's like, I think they should be at 1%. He's like, the Fed's a joke if they're not at 1%. Like
I mean,
there's negotiation tactics like at scale with these things are so funny to me, because he just doesn't care. Just throw out the wildest
people
thing.
get so bent out of shape about it. And it's like, of course they're not going to be at 1%. But
Yeah.
when you say something that absurd, well, maybe they'll be at 3 or 3.5.
Yeah, 4 sounds really good.
Yeah, right. Now that doesn't sound crazy, right? So I don't, people take him way too serious, I think.
I was like, I can keep my job at 4 now because he's throwing out 1, so that doesn't sound so bad now. Yeah, that's
exactly.
hilarious. But yeah, so there's a few client examples I want to talk about, active clients. One of them is a husband-wife duo in LA County, and it's pretty high end price point, right? LA County, a lot of the higher end stuff sitting a long time right now. Not an easy market to transact in. But I think it's an example of if you're on the sales horse right now and you're making offers and you're talking to people, you can do deals. And his name's Joy Sanchez, him and his wife. His wife's an agent. He kind of handles the investment side. They're doing a lot of deals. I'm not a lot. It's 10 a month, but they're making it happen at one of the highest price points. And they use us for leads. They engage with our sales coaching team and get assistance on putting together deals the right way. And they're doing deals consistently. And I would say they're probably no smarter or less smart than anyone else out there. I think it's just you kind of have to turn a cheek to all the fear out there. And if you do that, I mean, are you going to make $1 million a deal right now? No, but they're making money doing listings and wholesale deals in a really hard market to transact and do business with really high cost per deal. But the one thing that they're doing that I think was why I want to bring them up is they just get really creative. And so they have really good relationships with buyers. And when they're negotiating with off-market sellers or on-market sellers, they're kind of prepped already with a number. And so they'll take a property they think is close to one of their buyers and say, hey, this is the range I think I'm going to get this in. Is that a range that you're open to? And they'll go in and they'll offer, no contingencies, no inspection period, no earnest money. And they'll get it. They'll kind of pre-sell the deals, which I think is a good strategy right now.
I think it's a great strategy. Then you go in with some confidence. I thought you were going to say that they were sub 2 on lawnmowers and selling them, but but no, I think that's a great strategy.
That's Pace's new course.
Yeah.
He posted this thing on Facebook or in a group or something that I saw, which he was like complaining because he bought this deal from someone in his group, or he was laughing about it or proud of it. And it was a wholesaler that got this subject to a deal, that then assigned it to a second wholesaler, that then assigned it to a third wholesaler, then assigned it to a fourth, and the fourth assigned it to Pace, and Pace is the one that bought the deal. And I was like, there's no way that deal benefited the seller. There's like 4 different parties that could have put them in default along the way.
Yeah, that sounds messy, like just way too messy for me to even want to mess with at all. So yeah.
Oh man. But yeah, so I think relationships right now, if I was going to
I did that a lot thinking back now, in Portland, that type of strategy.
Or was a part of one deal?
No, not the Pace deal. our clients in LA County, like I would have a small list of people I'd wholesale to, and I would go to them. I'd be like, hey, I think we're going to get it in this range.
Yeah.
What do you think your number is? And I'd kind of frame it that way. But you're right. You'd need to have good relationships with people to have that conversation, right? If you don't know people and you're having that conversation, it can sound slimy or like you're trying to bilk them for as much as possible. But if you truly have a good working relationship with them, you're trying to make sure they get it at what they want it for, and you get what you need out of it too. So I like that strategy. It's been great for me, and it sounds like it's working well for them too.
Yeah, and just because right now it is harder to underwrite, right? Like it's harder to find really recent comparables. There's a lot of active listings, but there's not as many pending and sold, and it's hard to get a really good feel. But the reality is, if you're like Joy's not buying a lot of deals himself, it's very transactional, listings and off market deals. So I just think it's the right way to leverage relationships, which isn't a bad word, and get firm numbers you can negotiate off of and get deals done. Because then going into a negotiation knowing like, hey, if I get this at $1,050,000, the guy already told me he's good at 1-1. It's a $50,000 fee. That's helped us tremendously. One deal, for example, I can think of in 2022 was a deal, a weird duplex that everyone had tried to sell. It had been tied off by like 8 wholesalers, and no one could sell it. And we got the deal. And I just went to 2 or 3 guys that are really good relationships with, like, hey, where are you on this? And they gave me a number, and we made 40, 50 grand on it. So that's a good strategy. There's another example is Brandon. He's one of my favorite clients we have right now. He's in Salt Lake City, which is one of those, I think, kind of unicorn markets right now where it's still seeing pretty crazy activity year over year, pretty like strong.
Yeah, Utah's funny like that.
Yeah.
It is, but good for him.
Yeah, he was when he came to us, he was still working his W-2. He was selling alarm systems for Vivint and making $500,000 a year doing so, and was starting to flip and starting to do some deals. And he came to us obviously for same thing, leads and conversion support and help on the coaching side. And now no longer working in W-2, just sold out a flip for 100. Just had like a $200,000 a month between a flip that he had turned into wholesale deals. And the second you get creative, the second thing I see from our clients that are winning is they just have an obsession around sales and relationship building with sellers. And no matter what market you're in the country, if you can just obsess over that, I mean, the amount of call reviews and call listening that he's doing, and how long he spends on the phone with the sellers or driving out and sitting in the living room with them, and the amount of care he takes into those conversations, that's how he's winning deals in a very competitive market. I mean, New Western's very active there. There's a lot of really big shops that are active there, and he's crushing it. He's at a 39 lead to contract right now. He's at like a 12x from ad spend on his marketing across the board. So obsession with sales too. And if you guys are in a spot right now, and he's early in his real estate journey, like he has to be transactional, right? He can't just sit there and sit on the sidelines. He's a year into his kind of self-employed journey to already jump 2 feet and left his W-2. So that's the second thing I'll call out, is just obsession over sales alongside getting creative. So I don't know if you have anything to add to that, but just another example.
Yeah, I mean, I just like how that translates to different markets. Like right now, his obsession of sales is working in his favor to getting, heavily discounted properties, right? Utilizing market dynamics and whatnot. I mean, Utah's a little bit better, it sounds like, than other markets, but the way that then translates as we kind of go back up the roller coaster into a hot market is you're going to have every Tom, Dick, and Larry trying to buy stuff off market again. So your sales skills then just give you the opportunity to buy it over those people at a reasonable price, right? So like now you get them to like you and you're trying to get the lowest price possible. In the future, you're just out jousting all these other ding dongs and, just being able to buy something for a reasonable price. So that's kind of the way the pendulum swings, right? So it's a great time right now.
And when you focus on sales that way, you can buy so much cheaper, because he was able, so the flip he just closed, he bought it, he was projecting he was going to make 150 on it, and flipped it right before closing. He then found out right before he already had a buyer, he was going to make 150 on it. It found out it was a meth house, like last minute. I don't know how it slipped to the last minute, but he found it last minute, ended up making like 110 on it when it closed last week or 2 weeks ago. So that's a $40,000 swing. And if you're buying with normal flip margins and you have an $80,000 profit on it, and that becomes 30 grand, you just don't have the same buffer. And so I think obsessing over sales gives you that extra buffer. as you build those relationships and get deals cheaper. So you can have more things go wrong and still walk away, in this case, with over $100,000 in profit.
And there's
Um,
always something. There's always something when you're renting a house. Now, meth house, how they found that out, probably they were there and the neighbors was like, "Hey, did you know they used to cook meth in this house?" And he was like, "Oh shit." But who knows?
yeah.
I every meth house we ever bought, we knew it was a meth house from the very beginning. So not that we buy that many of them anymore, but
Salt Lake's different, though.
what's that? Yeah, so
Salt Lake
that's
City.
true. Maybe meth was just smoked in that house one time, and that is considered a meth house in Utah. I don't know.
Could be. Yeah. 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 The last one I thought was cool to share was we have a client, Alex, who is, I think we've pushed on him to get very creative. He's kind of struggled with the off market side. But what he's had massive success in is working his leads, obviously making offers, having conversations with them, but then just taking a lot of referral commissions and bringing agents into the deal when it makes sense. And I think if you guys are struggling to put together off-market deals, or you're in a market that's struggling, people still need to list their homes. And if you're in a higher price point market like he is, which is in San Francisco, you can get paid $20, $30, $40,000 on just 25% of GCI on a deal. And so if you have leads in your pipeline, agents are really hungry in it right now. And as you guys know, agents are not great marketers. They don't have, paid marketing and big pipelines. So really leveraging that also, if your leads aren't a good fit or your offers too under market for them to accept it, still monetizing your leads other ways. So that's the third one I would say. Get creative, just become a master of sales, and then monetize your leads in different ways, I think is a very valuable thing to do also right now.
Yeah, I mean, having the ability to do that and turn leads into, partial commissions is like, it's like the holy grail of, especially in a time like right now. So good for him. And in that market, that's a tough market, right? So like, it's even harder to underwrite stuff there. You need more capital to buy it. But people still need to sell their houses. And like you said, the commissions they're big when the price points are big.
Well, those are kind of three I wanted to go through, guys. But I think leaving the show today, the ultimate message is don't live in fear, right? Like that is there to me, don't be 1 foot in, 1 foot out. Either get out and sit on the sidelines, or be in and take it seriously. And you can be in and take it seriously and be in maintenance mode. Tucker said he's kind of in maintenance mode himself right now. He's still looking at lots to buy. He's still building out some of the lots he already has active, but he's just pacing it and being smart about it. So there's deals happening right now. There always will be. And if you take it seriously right now, you're going to win when things turn around, which they always do. It's just the way the business goes. So as always, no matter where you listen to this show, Apple, Spotify, YouTube, subscribe. Let us know in the comments there what you guys want to see more of. If you have been here this whole show and you want access to a lot of what we do completely for free, no cost to you, you can join the school community down below with almost 800 now other investors and agents. Get around them on live calls and see what other people that are winning are doing right now. So until next time, you're only one deal away.